Hello, my name is Artūrs Breicis. I am certified tax advisor in Latvia. And in today's video, we are going to talk about how to rent out a property in Latvia tax efficiently. We will look at the available options, which tax regime to choose, whether or not you have to pay VAT, and so on. So let's get started. So the content of the video, first of all, we will look at the options, how to structure your real estate lease or rent, and basically we have 4 options to consider. First 3 options relate to owning and renting out real estate as being individual, as an individual owner. The fourth option is that you are not kind of owning the real estate directly, but the real estate is owned by the company, which is owned by you. So from the corporate income tax perspective. And finally, let's look at the VAT, application of the VAT. So the first option, first option is that you own the real estate and you register yourself as the self-employed or as the register your commercial activity or economic activity. So you become a personal income taxpayer, and you pay the personal income tax on the difference between the proceeds and business expenses. So basically you pay the personal income tax out of the profit you generate from the lease of your asset. And Latvian tax rates, personal income tax rates, is progressive. We have 2 tax rates, as you can see, 25.5% for annual income up to 105,300 euros and 33% on excess of that. And then you have to remember that we have also from this year we have the additional 3% personal income tax, which applies to if your total income exceeds 200,000 euros per annum. This is kind of a surcharge. This is not specifically related to income, but to specific income, but to the total volume of the income. So, but this system works like you have revenues, you have expenses. Let's look for a simple example. For example, you have a real estate. Let's draw it. Yes, you have a real estate. Having, for example, in the store in the first floor and residential premises on all the other stores. So you have both residential tenants and also the commercial tenants. So basically this means that first of all there could be different VAT applicable to the commercial and non-commercial and residential, but that's a little bit different kind of aspect. First of all, take a look at the calculation. Suppose that the value of the real estate is 10 million and you generate the lease proceeds 1 million per annum per year. So, but you have to hire you have to employ some managers who are kind of managing this asset and doing all the things and so on. So you have the labor expenses, for example, 300 euros. Yes, you have some materials which you can deduct as well. Let's say 100 euros per annum. You have some other expenses like interest expenses. If you have, for example, mortgage or this you have loan for this to finance the acquisition of this real estate. Let's say it's another 200,000 euros. So in total it's 6, let's say other expenses, another 300,000 euros, and the profit from the operation is 100,000 euros. So out of this amount you pay tax to 25.5%, which is basically to 25,500 euros. So you can deduct most of the expenses. Here's other, including amortization. I forgot. Yes, and then you can deduct most of the business expenses. Some of the expenses you should add as the capitalize, but mostly you can add most of the deduct most of the expenses and pay the corporate income tax, pay personal income tax on the difference. Yes, on the profit. So this is basic business activity, and then this regime is applicable if you have material costs. You have not only a lease income, but you have also costs, and you are kind of interested to deduct those costs. So if you have this 100 euros, so up to this amount you pay 25.5. If more, then you pay 33%. And if more than 200,000, then you have to pay additional 3% personal income tax to this from this profit. In addition, regarding social insurance contributions, since this video is devoted to the non-resident shareholders, or not shareholders, but like owners of the real estate, then usually non-residents are paying social tax in their own country of residence. So for social tax, if you have this 1A certificate, then you don't have to pay social tax here, social tax contributions. But basically, if the self-employed person is a local resident, of course, also social tax is payable. Yes, which basically it depends on the amount of income, but still. You have to remember that either you should provide some certificate or proof that you evidence that you are paying the social tax in your own country, or if not, then there might be a case that tax authority may ask you to pay to get socially insured in Latvia as well. So you have to not to forget about social tax. But in general, usually non-residents are not paying social tax in Latvia. They are paying the social contributions in their own country. Okay, so yes, as the individually registered as a performer as economic activity pays personal income tax by submitting annual declaration or annual tax return once in a year from 1st March to 1st June. If it exceeds this amount, then declaration should be submitted earlier. If it happens that you pay social security contributions, then you will be required to make quarterly returns. So, conclusion about this first option. What are pros and cons? So the first advantage is that you can deduct business expenses. And this is suitable for long-term business, and there are no limitations. And the disadvantages are that you have to keep books, you have to have accounting, you have to submit annual tax returns, social tax may apply as well. And of course, it's administratively burdensome compared to other options, some of the other options which we will look later. And the next option is so-called special tax regime, or so-called notified economic activity. So basically, under this structure, you are not kind of declaring yourself as making economic activity, but you are notifying a tax authority that you have this lease agreement, and tax authority accepts it, and you pay basically 10% of the gross rental income received. Yes, so this is, from the one hand, this is very simple tax regime, and 10% tax is very low. But from the other hand, you are not eligible for any deduction anymore if you compare this with the previous option. In this case, only the real estate tax is deductible from the rental amount. So yeah. In this case, if you have an apartment or a house and you are kind of letting it out, immediately within 5 working days you have to notify tax authority, otherwise there might be penalties. You just notify and submit this agreement, lease or rental agreement, and start paying this 10% tax out of the gross income. If you are earning too much, more than 200 euros, then additionally this 3% personal income tax applies as well, the same way as in the first option. But in general, if those income is less, you are just paying those 10% tax, and that's it. There are some nuances which should be kind of considered. For example, how to structure the utility bills. Who is going to pay them? Because if you will charge the utility bills to the lessee or tenant, then most likely the 10% should apply also to those utility bills. That's why you should be careful with that. But in general, the 10% is payable on the gross lease income, and there are this is very easy and very easy and administratively easy option. However, there could be 2 scenarios. One is that you lease out your property to some physical person or some individual. Then you are eligible for paying this 10% tax. The other option is that you lease out to the property to the legal person who has registered as a performance of economic activity. In this case, this legal person or the registered taxpayer should pay 10% tax instead of you. So basically, then you will receive the income after 10% is payable by this disburser of the income, by your tenant. So that's why the only difference is who pays this tax, either you or your tenant. So if you are dealing with a physical person or individual, then you are responsible for everything. But if you are dealing with a legal person or taxpayer, then most likely this taxpayer is eligible or is responsible for everything. So what are the pros and cons? So advantages is that, of course, it's very low tax rate. There are no social insurance contributions in this case. It's simple, no bookkeeping, and everything is predictable. Of course, disadvantages are that there are no deductions. So if we refer back to the previous example, in this case, if you rented out it for 1 million, then 10% you had to pay. So 10%, it's 100,000 tax plus this 3% surcharge. So it's another 30,000 euros. So if we compare this amount, 25% and 130%, and of course it's not comparable, as you see. And then of course in this case, this regime is absolutely disadvantages, this simple regime. But of course, if you have, for example, flat or apartment and it's owned by you, you don't have any interest payments, no expenses, you don't have any deductions, so you just rent it out. Then of course this tax regime is very advantageous. The third option is micro-tax regime. It's obviously works the similar way as previous option, but there are first of all tax rate is much higher. It's 25%, and eligible threshold for the micro-tax regime is 50,000 euros per annum. So theoretically, you can apply this micro-tax regime also to the rent of the real estate, but in practice, it's only you can theoretically do it, but it doesn't make you any sense. It doesn't make any sense at all. So that's why I'm mentioning this regime just to say that there is such an option, but this option is the worst of the compared to all the other options. So micro-tax regime is historically it used to be a good regime some years ago. Then the rate were 9%, and it was really beneficial for the economy. But this regime was made worse and worse each time. So and currently it makes sense to use it only in case if you have some small business activity, and the only advantage of it is that it is simple in the administration. But that's it. So advantage simply to administer, predictable, and but disadvantage is that no deductions, high tax rate, based on turnover, and it's not suitable for most of the businesses. So the option number 4, and this option differs from the previous ones. Difference is that in this case you are not owning real estate directly, but you use a company for that, and for this reason you can either sell the real estate to this company, set up a company, sell the real estate, or, which is more advisable, to contribute as a contribution in kind in exchange for shares in a Latvian company. In this case, you are not required to pay this capital gains tax. So yeah, and you use Latvian company instead of owning this real estate by yourself. And what is the benefit of this? The benefit of course is our beneficial corporate income tax, which is payable only when the profits are distributed. So then dividends are paid out. In this case, this means that you generate rental income, and this rental income is not taxed at all, provided that you're not taking this money out and you use this money just for the business purpose and or investment, or just simply keeping in the bank account of the company. So this is a main advantage, and the advantage is that yes, that if you refer back to this example, then in this case you have 1 million euros lease income, and profit is 100,000, and you don't have to pay. In this case, if you are just self-employed or performer of economic activity, you pay 25%, here 25,000 euros. But if the case were in the company, so in this case you are not required to pay anything here until you distribute dividends. So based on this example, you basically save this 25,000 euros per annum. Yes, if you are, let's say, reinvesting this 100,000 euros, you're reinvesting it, and you are saving the tax. Yes, you're saving the tax each year, and if you are doing it, and of course sooner or later you will decide to take the money out of the business, but you have to also remember that the value of the money is kind of reducing each year by year, and therefore it makes sense to postpone the taxes as late as possible. So the time value of the money is reducing all the time. So this is a kind of most benefit of the company. And yes, this pro is advantage is that the corporate income tax is zero on retained earnings and paid only upon distribution. You can still deduct all business expenses, but those business expenses are for the accounting purposes, not for the tax purposes. Suitable for property portfolios, yes, of course, this is how that you generate additional cash, and this additional cash gives you opportunity to make additional investments. Of course, disadvantages are that you have to have a full accounting of the company, and of course the company establishment and maintenance cost, and then you pay tax only when you distribute dividends, and probably its company is not very suitable for small scale projects. If you, for example, are renting out a flat, apparently the company is not recommended to invest. However, if you have a multiple real estates and the multiple flats or you are building houses for living or for renting out for residential purposes, then it makes sense to establish a company from the very beginning, when you can deduct, you can reclaim also VAT on, for example, on buildings, on kind of constructing works and so on. So that's why this corporate income tax and use of company is advised if you have a kind of a more or less large scale business. Yes, if it's not like in this example. In this example, if you have like 10 millions of the real estate, and then it makes sense to invest this real estate into company and then do all the things through the company. Okay, so last few comments regarding VAT. What you should remember is that VAT on residential lease, residential rent is exempt, so you don't have to pay VAT on that, charge VAT. But if you are renting out a commercial property to legal commercial property, then it's of course taxable. And that VAT registration threshold is 50,000 euros. When you reach this threshold, then you have to register as VAT payer. Of course, it is also if you have a company, if you have VAT registered person, you have to always calculate which is better to if you're building a building, so you reclaim some VAT as input VAT, but you have to remember that if the part of the use of the in the future of the building will be VAT exempt, then you are not eligible to reclaim all the input VAT, and in the next 10 years period you will have to each year to adjust the VAT, input VAT, based on the actual taxable and exempt transactions. But this is of course already kind of what you should remember for the time being, is that yes, VAT is payable when you reach this threshold, but it refers to the non-residential commercial activity. For residential property, the VAT is exempt. Transaction is exempt from VAT, and you are not going to pay VAT. Okay, thanks for watching this video. If you have any questions regarding those questions or any other questions regarding taxes, please feel free to contact us, and hope to see you soon. Thank you and goodbye.